Let's get a status update here
Sure.
on the IPO market in general, because it was pretty bleak in 2017 and things have turned around in 2018.
So
what changed and is it sustainable?
Not sure it's sustainable. We're watching the tape just like you guys and the calendar, but there were 5 deals done in the first quarter, and now there are another 8 that are either done or on the way to being done, so 40% higher than last year's calendar.
Rett, something you've talked about is the lack of transparency of IPOs and the fact that investors just don't have a great way to get a sense of whether a company is any good or not with the information that's given. Snap was pretty I don't want to say egregious, but an example of one in which investors apparently misjudged the quality of the business. What's the issue? Why aren't investors getting the information they should get?
Well, first of all, because they're getting the data from the people that are selling them the stock. So you already know Goldman's view because they'd like to sell you $4 billion of Snap. But from a more macro perspective, our approach is this, that what investors are used to is this sort of creative process to research, where an analyst will write up his thoughts and tell you what he thinks about a company. We try to be much more systematic. So instead of focusing on 2 or 3 things about a company that we think are notable, like initiating with a buy rating on huge market and awesome team, right? We score on 14 individual points, right? So we think you have to look at everything instead of being selective and subjective about what you look at. Second of all, these things are all different. Every analyst covers every company differently, and every company is its own little snowflake. Our process is to look at them all the same and score them all the same.
What are you actually looking at? What criteria are you looking at?
Well, so some of the fun ones you talk about, transparency. We have something internally that we call the obfuscation index.
Yes.
Right. We also have an opacity index. So when people don't want to tell us what they really do, not good. When they don't want to tell us the key metrics about the fundamentals of their business, like Snap, for example, not telling us how many salespeople they have, or the fact that they even have salespeople, not good.
So, I mean, something like an obfuscation or opacity measure doesn't sound concrete. So how do you construct, how do you put a number a company's opacity?
So that is the magic of the whole system, and that's why no one's ever heard of this system except for the customers until now, because now we have 4 years of data where we've looked at it on a rigorous basis to see how well it tracks the way the deal's performed. So for example, we have a score for something we call founder power, which is usually very important, although Snap was an interesting outlier. Are the founders still there? Do they still have their jobs? Are they still on the board? Do they still have voting control of the company? So Snap, for example, is like a perfect 10, and you can score that very rigorously. Just to give you an example as an answer to your question, where some of the deals we're seeing now, you have managers that came later, aren't founders, don't own very much of the company. Maybe they're on the board, but they have very little to say about what's going on. Founder power, it turns out, is highly correlated to the way these deals work, unless you're Snap and you have a very low business score. And when a bad business meets high founder power, the business wins.
A real problem.
Yeah.
How high does founder power rank versus some of the other variables you look at, or do they change constantly?
So the correlations are interesting. Like, for example, founder power is very important. Business quality is very important. Things that we score for are things like hype and buzz, which turns out to be not correlated. So just because you've heard of a company doesn't mean it's going to do well. Also, we score the investors. So you would think, like, okay, Warren Buffett and Sequoia and everyone else
the
is
early
in the cap
investors.
table, the pre-IPO investors. You would think that that would be good. No. It turns out that's actually not correlated to the way the companies perform.